Hi guys, the main idea of this video is to explain you the amendments that have taken place in the Companies Amendment Act 2017 to the Companies Act 2013. If you see, I'm really concerned about sections 139 to 148, the exclusive auditor sections, chapter 10, whatever are important in the audit syllabus. This video is both meant for students studying CA Inter IPCC and CA Final. So you can go ahead and of course whichever book you're using, you can go there and make these changes or run through this video for a comfort on the changes that have happened in the 2017's Amendment Act. So let's look at the very first section here, section number 139. You can look out section 139 has of course 10 subsections. The 139.1 deals with appointment of auditors in subsequent auditors in the companies other than government company. So the first change is towards that, where you're looking at text in 2013 Act and the 2017 Act in the comparative table right next to me. You can see here, as a matter of fact, what has been omitted is a piece of line that you see right now. Every company shall at the first annual general meeting appoint the auditors who will hold office up till the conclusion of 6th AGM. You know this provision. But what you also know there is at the 2nd, 3rd, 4th and 5th AGMs, you have to ratify the particular appointment. But right now, if you see, provided the company shall place the matter relating to the appointment of members, appointment of the auditor for ratification. Such provision has been omitted. So there's no ratification right now in the 2nd, 3rd, 4th and 5th AGMs. It's been omitted. So the section reads like in 139, subsection 1, the first proviso shall be omitted. That's the text from the Bare Act. You can see the first proviso there has been omitted. That's your first and foremost change in section 139. Up next is section 140. 140, the section deals with what? Removal, resignation of the auditor, and of course giving special notice in case you're appointing some other auditor in place of the retiring auditor or expressly providing you're not appointing. So what is the real point here is about in subsection 3. First up, what is 140 subsection 3 about in the Companies Act 2013? 140 subsection 3 is about penalty for non-filing of the form ADT 3. Right, if the auditor resigns, he has to intimate it to the company and the ROC within a period of 30 days, right? If he fails to do so, the auditor who has resigned from the company shall file within a period of 30 days a statement in the prescribed form, which is ADT 3, with the company and the registrar. That is what is the provision. Now, that's not changed anything. But if you look, that is 140 subsection 2 as such. If you look at 140 subsection 3, the punishment for non-compliance was ranging from a fine of 50,000 rupees to 5 lakhs. So where is the change coming in the Companies Amendment Act 2017? The punishment for non-compliance has now been changed to 50,000 or the remuneration of the auditor, whichever is less. Now, if somebody is earning only 30,000 or 40,000 as remuneration, you can't ask him to pay 50,000, right? So that is exactly why the small amendment has been made there, saying that he will be paying only 50,000 or the remuneration whichever is lesser in this particular case. So you can look back again into the text of 140. In section 140 of the Principal Act, in subsection 3, for the words 50,000, the words 50,000 or the remuneration of the auditor whichever is lower shall be substituted. That is what is the text that you can pick up from the changed act. So that's what it is all about. Remuneration is the new inclusion here. That is the change in section 140 subsection 3. So that is the change in 140 and 139. Now we are moving up to eligibility, qualification and disqualification, which is one of the most important sections here talking about. We have section 141 coming up for you. Look out for what is being talked about. Now it's a very, very simple change. 141 subsection 3, which is all about disqualification. I am discussing about clause I. Okay, here we talk about clause I. The part of the provision is where you are supposed to talk about the services rendered by the person. Okay, the amendment is towards I think no, that is something not the provision. So you look at it. The fact of the matter is that it was like a person providing services. Now that entire provision has been replaced by the words person who directly or indirectly renders any service referred to in section 144. the company, holding company or subsidiary company. You know the list of 144, right? In the list of 144, you have certain services not to be rendered by the auditor. Those services are not supposed to be rendered by the auditor or his network firms to the company, holding company and subsidiary company. What do you mean by the words directly and indirectly? The words directly and indirectly have been explained in the section 144 clearly. So you can continue to use the same explanation. They say, for the purpose of this clause, the term directly or indirectly shall have the same meaning as assigned in explanation to section 144. So that's the change in 141, guys. 141 subsection 3 clause I, that has been changed to making sure that if an auditor is rendering any services mentioned in section 144, he will be disqualified if he performs those functions with the company, holding company and subsidiary company. Alright, let's move on that note to the next change we are looking at in section 143, wherein we are talking about the powers and duties of the auditor, and of course 143, 9 and 10 talking about the auditing standards. Where exactly is the change? Now watch out here. I'm first taking up the Companies Act 2013 provision. Auditors shall have the right of access at all times to the books of account and vouchers of the company, whether kept at the registered office or at such other place. Now, all that is fine. Alright, provided that the auditor of the company, which is holding company, now if you are the auditor of a holding company, you are allowed to also check the books of subsidiaries as far as it, no, you can't check everything and anything. As far as it relates to the consolidation part, you can check subsidiaries books also. So what is the amendment in 2017 Act now? Provided that the auditor of a company, which is a holding company, shall also have access to or right of access to subsidiaries and associates. So the word subsidiaries now has to be read as subsidiaries and associates insofar as it relates to the consolidation of financial statements. Small and simple change. For the word its subsidiaries now shall be substituted by the words its subsidiaries and associates. So that's it. Very simple and small change. Moving up next, we are talking about the change in here in 143 subsection 3. Now 143 subsection 3 is the report on assertions given by the auditor, where he is giving the report on assertions. You have almost 10 points there. In the 9th point, we are talking about internal financial controls system. This is what is the wording used. So if you look at that, point I talks about whether the company has adequate IFC, that is internal financial control system in place, and whether they are operating effectively. This is the 2013 Act, that is the assertion raised, the question raised. Now the same question is asked slightly different. Whether the company has adequate internal financial controls with reference to financial statements. So in place of the word system, they have replaced the word, in fact the entire thing, in place of the word internal financial control system has now to be read as internal financial controls with reference to financial statements in place of operating effectiveness of such controls. So the word IFC has now been replaced as IFC with reference to financial statements has been substituted. So that's second change in section 143. Let's move on to the next one here. So that's what is the change. Then move up to the last topic here. We are talking about section 148, where 148 is the cost audit provision, and the provision shall, now again in the same provision as such, see, I'm talking about 148 cost audit, and I'm also talking about 143 subsection 14. Why did I talk about 148? Because 148 is on cost audit, and 143 subsection 14 talks about the same provisions of 143.12 being applied to a cost auditor and a company secretary for cost audit and secretarial audit. So the provisions of 143.12 which are applicable to a statutory auditor shall mutatis mutandis apply to cost auditor under section 148 and secretarial auditor under 204 is the text of section 143 subsection 14. Now they made a simple change everywhere with respect to the cost auditor. If you see, the wordings were cost accountant in practice. Can you see that? This provision, that is 143.14, were fraud provisions. They are applicable as it is to a cost accountant in practice conducting cost audit under 148. That was also there. So in here and in 148, which I am going to take you through in a little while, to the cost audit, the words cost accountant in practice has been substituted by the word cost accountant, which goes to say that whether or not he is a cost accountant in practice, the particular person is eligible to conduct the cost audit right now. Moving up to the next part, here we are talking about 147, punishment for contravention. I hope you remember punishment for contravention for the company and for the auditor has been separately given in 147 subsection 1 and subsection 2. I am dealing 147 subsection 2 right now. It is about the provision for the auditor. Now you be very clear, this most of the students think right from 139 to 146 all sections are covered under 147 2. Once again I am alerting, this is a very important point. Section 139, 143 on powers and duties, 144 on certain services not to be rendered, and 145 on duty to sign the audit report. Only these 4 sections are included in the text of section 147. Okay, so whereby what happens is 146 on auditors duty to attend general meeting and all that, they are not covered in this. But for the company, 139 to 146 all are covered. So some students are still thinking that 139 to 146 whatever has been contravened will be booked under 147. No, from the point of view of company, yes, all 139 to 146 can be covered, but from the point of view of auditor it is only 139, right? You can see that being underlined once again. 139, 143, 144 and 145, all those underlined there, only those 4 sections are covered. Okay, now what is the change here? Earlier the punishment was for the auditor, and that too here we are talking only about committing knowingly or unknowingly. So when you do it knowingly or when you do it unknowingly, there are the different punishments. So in this case they didn't tell anything, so it is unknowingly. The auditor shall be punishable with a fine which shall not be less than 25,000 rupees, which may extend up to 5 lakhs. The range is 25 to 5. What is the Amendment Act? So according to the amendment, the entire text is same, but shall be punishable with a fine. See there what is being underlined. Shall not be less than 25,000 rupees, but which may extend up to 4 times of the remuneration of the auditor, whichever is lower. Okay, and then of course the upper limit continues to remain like the after the 4 times of remuneration. So after the word the 5 lakh rupees, the words or 4 times of remuneration of the auditor, whichever is less, shall be inserted. So very clear. Now the limit has changed, that's all. It was ranging between 25 to 5. What now has happened is what? The 25 is continuing to be 25, but 4 times of the remuneration. That is what is the thing, which may extend up to 5 lakh rupees or 4 times of the remuneration, whichever is lower. Okay, so 25 continues to be 25. Upper limit continues to be 5 or 4 times of the remuneration, whichever is lower. So his remuneration 4 times is coming to 8 lakhs. Then it will still get stuck with 5 lakhs only. But if it is upper limit of remuneration is coming to only, let's say he is earning 1 lakh per annum. So 4 times of the remuneration is only 4 lakhs. So 4 lakhs or 5 lakhs, whichever is lower, it's going to be counted like that. Moving up next, you can see the same thing. This time if he commits knowingly, again 139, 143, 144, 145, those, but the word knowingly is underlined. See, knowingly or willfully, with an intention to deceive the company or its shareholders or creditors or any tax authorities, this time it shall be punishable. You know what is the range here generally? 1 lakh to 25 lakhs. That is Companies Act 2013, 147 subsection 2 provision. What is Companies Amendment Act 2017 provision? Provided that if an auditor, the same front text, he shall be punishable with imprisonment for a term which may extend up to 1 year. Till there it is all the same from 2013 to 17 Act. Where the changes come in is right here. With a fine which may extend up to 50,000 rupees. I mean the fine shall not be less than 50,000 rupees, which means the limit is 50,000 first up, or higher side is of 25 lakhs, because you remember 143, 12 to 15, the fraud provision, there also the punishment is between 1 lakh to 25 lakhs. So here, willfully if you do something, the punishment lower limit is 50,000, upper limit is 25 lakhs or 8 times of the remuneration of the auditor, whichever is lower. You can see there 8 times being circled. So 8 times of the remuneration, whichever is Lower limit 50,000 minimum fine. Maximum it can range up to 25 lakhs or 8 times of the remuneration, whichever is lower. So that is the change in section 147, punishment for contravening, 147 subsection 2. Let's move on to the last part of the amendment section. Oh yeah, one more change is there in 147. In here it is about the change in the wordings. You can see there. If the auditor is, found guilty, then he has to pay for all that, right? He has to refund the remuneration receipt, pay for the damages to the company, statutory bodies or authorities, or to the wordings used in 2013 Act where any other person. Circling the word any other person there, you can see any other person for what? For loss arising out of incurred. Now who is any other person? So right now in the 17 Act, they have been very specific about who are those. So the entire section reads the same except for pay the damages to the company, statutory bodies or authorities, or to members or creditors of the company. Members or creditors of the company. So instead of any other person, they are very clear. Members or creditors of the company for loss arising out of incorrect or misleading statements or particulars made in his audit report. If the auditor has done that, then he will be liable to pay to the members or creditors of the company. Right? That's about 147's change there. Moving up next, last thing which I already discussed with you. Section 148, central government to specify about maintaining the cost records in respect of certain companies. Regulatory, non-regulatory, all the text is there in 148. Now what's been the biggest change here? Very, very simple. The words cost accountant in practice have been substituted by the word cost accountant. That's it. The word cost accountant in practice has been substituted by the word cost accountant. That's all. So that the base of the number of people who can do cost audits is widened, nothing more than that. Right guys, so those are the changes. That's it. So this video in here was to explain you all these changes from 139 to 148 what we have been looking at. So I think that has been helpful to you, and in case there are any further amendments or any more videos that I would like to share with you, I will see you soon. Thank you.